Great. Good morning, good afternoon, good evening, depending on where in the world you are sitting. My name is Michael Filighera. I am, I'm not with, I own traders, helping traders and logicalsignals.com. And I have been a trader since 1979. I was an options market maker for many years, and I've traded pretty much here in San Francisco, where I reside. I've also traded in London. I've traded in Amsterdam. I've traded in Germany, came back to the US. Currently, I continue to trade, but I am a day trader. And I went from being an options trader to being a day trader. And I've been day trading for about 11 years. And I concentrate and focus on the NASDAQ and the S&P at the moment, their futures markets. But where I want to begin today is one of my favorite products that I've been involved with since 1979, actually, when I first entered into the options market. I've been a gold bug for quite a long time. So I want to just talk about gold for just a moment while we're building up our roster about which stocks people want to talk about today. Gold, in my opinion, is in a very, very, very strong, and there are a lot of reasons for it, and there are a lot of active things going on around the globe and within our own country that are supportive of higher gold prices. And so I have been tracking gold on an Elliott wave basis. And if I just kind of flip back out and take a look at the most data that I can get, and this data I go back to 1975 to current, excuse me. I'm having a little problem with my sinuses. Right now, the largest degree that if you're familiar with Elliott wave, the largest degree that I count for the gold futures is the cycle degree. Going beyond the cycle degree, you're just going to frustrate yourself because the precious metals tend to be very cyclical in nature. So we have found that cycle degrees work, but right now I'm even breaking that down further, and I'm within a cycle third wave up. And that cycle third wave began off of the 253 lows. I think it was 253. Yeah, 253 lows in 1999. So this has already been in motion for 25 years. So you track it within that cycle wave 3 are going to be 5 waves of primary degree, of which 1 and 2 are complete. And so we're in that cycle, primary third wave. Now I'm going to bring this down to the not the daily, I want that weekly, sorry, the 5-year weekly chart. Now we're going to take a look in it. And so within this primary wave, we're going to have 5 waves of intermediate degree, of which we have 1 and 2 complete. So we're inside the intermediate third wave. And what's going to be inside that are 5 waves of minor degree, of which we're in the third. So under Elliott, often the third wave is most often the longest and the strongest wave out of waves 1, 3, and 5 in an impulse move. And that would be up or down. In this case, it's up. And so within this minor third of an intermediate third of a primary third, we are subdividing as it should. And we're going to get 5 waves of minute degree. And so within this, we're looking for the completion point for the minute third wave. So it'll be minute wave 3 being complete. That would be of minor 3, and that's going to be of intermediate 3. So as you can see, Elliott wave are building blocks. And so what we're really looking at here is that the market tends to just subdivide inside these third waves. And so as we build up on them, they continue to subdivide. But if you just count it out properly and just keep a track of it, you will see just the pure bullish picture that is built up in gold. And so what you're going to find up here, these are my Fibonacci resistance levels that I'll be looking for to complete these different levels. So, and they're color coded actually. So if you follow me in my work, you'll realize that I've used the same colors all across all of the different charts that I do. And right now, the primary is green, the intermediate is yellow, the minor is more of that orange color, the minute is the white, the minuet is that purple, and then the sub minuet is the yellow, and then the sub is that blue. So this is how strongly this is all subdividing. So we can see on the weekly chart that it's still building within this third wave, and it's been very powerful. And it took a while, but once it really started to rise, and there were reasons why it started to take off. And the biggest one being is that I'm sure many of you are aware that the uh, global central banks, basically, and it's actually the individual countries that are doing it, the currencies that we use are basically going to be turned into digital currency. And so that's well underway. And in fact, we can look over at China and realize that China's already trading in their digital yuan. And so when you think about a digital currency, you might think about Bitcoin. And so you have to think about, well, what backs Bitcoin? And someone's going to tell you nothing. It's virtual. It's a virtual coin. So you've got a piece of paper that tells you you now own this at this price. And so if you're really looking to back your currency, most people, if you're going to do trade with that country, they're going to say, well, what's backing that digital yuan? So China has been not forced, but China has intelligently gone out and they've been really purchasing gold for several years now. So they're building up quite the gold reserve, and they're also purchasing silver, and they're also platinum. And so whether they're actually using those as a part of a storehouse of value, so to speak, or to back the yuan, I'm not sure. But gold, I know for sure. Gold has always consistently been a storehouse of value. So in other words, when your currency goes down the skids and just really starts to decline, gold will go as well, but it holds its value. It will always have value over a fiat currency. So if you're really now backing that with a digital currency, you need something that's going to continue to have value when that digital currency starts to lose. So that you have something to back whatever trades you're doing in that currency. So with that in mind, we've got this very strong bullish market in gold, also in silver, also in platinum. We're going to focus on gold here for just a moment. So what I'm looking at is for this minuet fifth wave to complete. So what am I in that? I got 1, 2, 3, and 4. So I'm in the sub minuet wave 5. And within that, I believe I probably just today, I'm likely finishing up. Maybe we got a little bit more to go. I'm finishing up this particular fifth wave, and then this particular fifth wave, and this particular fifth wave, which then brings me to that third wave. Now there's continuing to be, we have a little bit more resistance above, and you can see the white, that's that minute, and there it is. There's the 3 kind of just sitting up there in parentheses, waiting for the top. So I'm looking for gold to come to a very near-term high, and then put in a little bit larger correction than we've seen thus far in all of this run. And so I'd be, looking for it to come back. And then you actually can use, if they're finishing a minute third wave and it goes to start a correction in a minute fourth wave. R.N. Elliott wrote and taught us, those that study Elliott, that a third wave, when it goes into a fourth wave correction, it will find its terminus, its endpoint, within the price territory of the fourth wave of one lesser degree. So if we're looking at a minute degree, the one lesser degree is the minuet degree. So wherever this tops out, I'm going to be looking for that fourth wave to bring us back to this level, right in here. So you can always pick your points and realize where you want to buy on the way down, or that you might want to, if you're just trading gold to trade and not necessarily putting it away as a long-term investment, well, then you'd be looking either to sell it and then buy it back in as it comes down, or you might want to hedge a portfolio of gold and so on. So within the precious metals, I remain very, very bullish on them, actually. And I can show you that, again, just using Fibonacci. And again, the degree that we're working on right now is that primary. Well, I've got primaries that take me all the way up to 3750. 3,750, and most people go, well, that's pretty high. That's a little ridiculous. It's like, it really isn't. if we take a look at what's really happening in the world, the digitalization of currency, the United States is doing it. We're just not hearing about it, but they're doing it as well. And Russia is preparing. China is already luring trading partners into trade in yuan for their goods and services. And so I know Japan is in there doing it. I know India is preparing for it. So, and I know the European Union is preparing for it. They don't talk about it, but they are preparing for it because it's a large process. And so that's going to continue to have upside pressure on gold because every time it pulls back, there's a flood. They come in and they're buying this very strong buying of it. And so I am been directing people to kind of, if you are a long-term trader, or even if you have a 401k or you've got a retirement and you're looking for something that you can leave in place for maybe the next 10 years or 5 years, gold is a great choice. And there are many different avenues in which you can take because many people don't have, if you buy one future in gold, that is equivalent to 100 troy ounces of gold. And so one troy ounce of gold right now is costing $2,783. So if you do that times 100, that's what you need to buy one troy ounce, one gold bar right now at the physical market. And so that's a lot of money. But there are some really great, I'll show you the one that I absolutely really like, and that is physical. And that's Sprott. Sprott is a Canadian company. They back their gold, this gold ETV, electronic traded fund, and they back it in gold, which is a little bit different than GLD. GLD also backs it in gold, but they can't get their hands on enough gold to cover the positions. So there's a little bit of a difference where this particular fund does pretty much one for one. So, if you have $1 in it, then you're going to, they reserve $1 of gold for that. And you can see that this index has basically followed gold higher. And I've been getting people in since 13 actually, and then down to here, we just kind of went nuts and got a whole bunch. And then we're just watching it rise. And you see that it's following the same pattern. They're all 5 waves coming up and they're subdividing beautifully. So there's still a lot of upside still left in this. And that's one way where you can participate. Your investment is backed by gold. And so I guess you could convert it if you wanted to. Now, that one I really like. And now just again, some of the other things that I do, I do trade every day. I have a trade room, and right now I'm keeping it extremely small because I like to work with the people that are in there and help them and give a lot of information. And also, I'm in the process of I also do daily updates on the NASDAQ and the S&P every day, and those are posted on YouTube, and you'll find them under Traders Helping Traders and then my name. So I own the channel, and it's Traders Helping Traders and then my name. There's another group on YouTube that also uses Traders Helping Traders, even though we own the name, which is fine. So, but in any case, I do that as well. But I'm setting up membership channels on YouTube. And so if you want to get more information about that, please just send me an email, michael@mgf1partners.com, and just ask to be added to my mailing list. And therefore, you'll always be in tune. If you have any interest in the trade room, you might want to just also send me an email because it's now by private invitation, so to speak. All right. Getting that all out of the way, now let's spend the next 14 minutes and let's talk about the particular issues or the stocks that you guys have put in. The first one is SoFi and SoFi Technologies. Now, okay, weekly chart. So that's where I would start. And I'd have to tell you that this right now, that's an ABC up, that's a B wave down. 1, 2, 3, 4, 5. It may have a little bit more upside. And I'm on a weekly chart, a 5-year weekly chart, I believe. No, there's the 5-year weekly chart. And you can see it's come down in somewhat of a corrective pattern. So that would be an A. There's the B, and here's the C wave. And then it does an A up, B down, and now it's doing the C wave up. So you could say it's an A, B, and then a C. Now, one thing under Elliott that does tell me, it's like if this is 3 down and this is going to be 3 up, it does have the potential to get itself back up towards this high before it would be expected to return back down towards the area of the lows to complete the pattern. Now, that's not cast in stone, and it's not rules. These are just observations that Ellie's made over the years, and the same with me. There is the possibility that I would say, well, actually, it could be A, and then, yeah, that's kind of deep, but 1, 2, 1, 2, 1, 2. Yeah, I wouldn't count it that way. But if it is, then this is in an explosive area. Because if you're getting 1, 2, 1, 2, 1, 2, it's showing a lot of subdivisions, and that one I wouldn't be able to count it because that should have come above that. So the way I would look at it is an ABC, and then 1, A, B, C. So that's an A wave, a B wave, and now you're doing 5s. So you can go from here, go 1, 2, and then you have 1, 2, 3, 4, and it would stay that way unless it came down and broke 859, in which case this then is completed. And I'd be expecting it to come down at least to 590 to $6. But otherwise, if it holds here, you'd be looking for it, and I'll just give you a very quick estimate. Again, this is on the count. So what we do is if it's 1, 2, 3, 4, and the 4, we don't go below 977, and we start to head back up, your first line of resistance is 1155, and then 1265, and then 1443.45. And those fibs are going to go with, we'd be looking for 5 waves up to complete a 3rd wave inside here. And so 5 is usually equal to 1, and that puts you at 1155. And anything above that's kind of gravy, so to speak. It's not uncommon. So the first one is 100. The second one is 1.618 and 1265. I would think it's going to be limited. The markets are tending, at least if we look at our indexes, are completing in what I'm viewing as an intermediate 3rd wave within an ongoing, there's a minor 5th wave going up. And so that minor 5th wave, when it's complete, will complete that intermediate 3rd wave. That intermediate 3rd wave is a part of a primary 5th wave. That primary 5th wave is going to have, actually, I could just quickly show you that. That primary 5th wave is going to also be within, let me go down to the 3 and you can see it easier. If I do it from here, you can see there's primary 4. That's October of 2022. So this whole rally phase, that's when it began, 2022. It's going to consist of 5 waves of intermediate. And they're yellow. So there's the 1, there's the 2, and we're looking to finish the 3rd. Why? Because within it, we have 1, 2, 3, 4. We're inside the minor 5th. And within that, we really are getting close now, because if I bring it down, let's say to the 4-hour chart, and I come in here, there's minor 3, minor 4. We're in minor wave 5, of which we've done minute 1, 2, and 3. So we're looking to finish the minute 4, and then we got one more leg up to do minute wave 5, to complete minor wave 5, to complete intermediate wave 3. There's our targets. Now, the market may have some trouble getting up there. We're running into a little bit of some headwinds. And what are those headwinds? Those headwinds are everything that's happening in the world. We've got some critical situations brewing in the Ukraine conflict. We still got these unanswered questions, and now this verbal barbing back and forth between Iran and Israel. So we have those. We have our election, very important US election on November the 5th. We have the Fed on November the 7th. So we have some things coming in. But in advance of that, we have this week some major, the Mag 7, 5 out of the Mag 7 are reporting this week. So I'm looking for I'm hoping that they're going to be positive, because I'm still looking for upside in this market. NASDAQ, same type of deal. So SoFi, it may participate if it starts to break out, then you've got your upper levels, but I wouldn't be looking for a runaway on SoFi. ROST, Ross Stores. Now, this is a good choice to bring up because retail is under fire right now. Retail somehow is not getting a good reporting season, I guess I should say. And they reported in September. Okay. So, and actually, we were looking in October for all this to begin. No, that was their dividend. So this was August. So the end of the third quarter, we're looking for that information. I'm not sure when they report or if they have, but obviously that might have been it right there. And I didn't like it, and they're not liking it today. So retail's getting hit. I'm not sure why, but if I take it up to even the daily chart, not a real healthy chart. Let me look at the weekly. Okay, we go 1, 2, 1, 2, 3, 4. Ugly, but it could be a 5, and we're still correcting. They may still have one more to go. And where you would put your fibs, you can run fibs. Once you get that 4, well, if it is, and that's complete, you can run fibs from that low. And I would call it up to this high. And then you go over to wherever that low is for the 4. And you put it, oh, come on. It's not wanting to, there you go. And so you can see 5 is equal to 1 at 164, 165, and then you got 181. So limited, but still does have some room on Ross Stores. But again, from what I'm reading, I don't follow individual sectors, but what I'm reading is that retail is getting hit pretty hard right now because their earnings are not coming in well. Insight Enterprises, not familiar with them either. If we look at the weekly chart, 1, 2, 1, 2. Oh boy, it's all Chop City. They have a lot of stuff going on. And what happened there? Earnings. And now they got earnings again. And they're hoping. Are they reporting? Oh, they report on Thursday. Amongst a very tight group here because Apple and Amazon report on Thursday as well. And so obviously they're not feeling so strong about that they're going to come out with a great report. I don't know. Upside in all of this, yeah, it's a tough call, but you could run the same thing. You can run fibs from here. I'm going to put it to there. Come on. To there, and then over that would I think would be the 4th. Very, very limited. 234, which is only, $23. So your upside is, for me, is going to be very limited. I do not think we're going to be breaking out. I think that actually we're going to be finishing. Now, having said that, let me also say that I do follow seasonality, and all of my seasonality charts are saying that the equity market should have a very solid November, and that starts on Friday. We got to get through this. We got to get through the big tech stocks that are reporting this week, and maybe that'll set us up to have a decent November. But all of the seasonality charts that I'm looking at, individual stocks, also the indexes, are pointing strongly higher in November. And so, but you have to continue to just work with your fibs because I'm not sure how, but for many stocks, like in these indexes, yeah, see, from the data that I have, this goes back to 1995, that these are all new all-time highs. So it becomes very difficult to say, well, what are you going to pick and where are you going to get? Here was the low from the financial collapse of 2008, 2009, and that's where that rally began. And then this, I'm going to assume, is the pandemic. Yep. So if you're going to look from there, then you're kind of still inside that 5th wave. And even if you 1, 2, 1, 2, 3, 4, it has one more little upwards, and then you find that resistance up there. So again, I think everything is kind of limited quite a bit. Let's take a look at TTD and the trade desk. Again, looking at the monthly, this one, come on, this one goes back to 2016. So I'm assuming it's not really that old of a stock. Not sure why that's like that. Remove that drawing. There you go. Somebody must have asked me about this one other time because I just have a lot of lines on it. But if I'm coming here, that was the original high, and that was in November of 2021. Wow, okay. And so it came down, 1, 2, 3, 4. Yeah, ABC came down and that completed, I'm not sure of what. And then we started another 5. And if I had to say 1, 2, almost you could say 3, but and I'm giving it the benefit of the doubt. That would be 3, that would be 4, but I'm going to give it the benefit of the doubt that it's 1, 2, 1, 2, and we're starting to rise. And that gives you a lot more room. But again, you're in all-time territory up here. Exactly where this is going to come in could be more difficult. There's that low. Yeah, it's just these really kind of screw up your chart. Another thing you can always do if you go over, if you have Thinkorswim, is that you can go over here and you put it in on a line chart. Line chart takes you to the actual close, where that bar closed. And many times it's going to be higher. You get these spikes and then it comes back up and the bar closes higher. And it does make your count a little bit easier. Like this is like 3, 4, 5. And that's just an ABC down. And then you start your process again, 1, 2, 1, 2. See, but that can't overlap. So it's just doing a bunch of 1, 2s. It could actually go and really go. And David just cut me off because I see the time. CRSP. I've done this one before too, obviously. So let me go all the way out to what do I got? Yeah, that one wouldn't work because you'd have to put that up to there. We were looking for how low it could get, and I'm sure that it did. This one, not sure what they do, therapeutics, okay. That's 5 down. This is 3 up, and it's looking like it's going to continue and likely break below 38. And you need to go back as far as you can to see where you might find support on this guy. No, you have support. You've got support down, not below there, but below that you have support at 28, 28.40. So again, it's turning up.